Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through YouTube, look at people's comments. I'll make comments on their comments. Uh, we'll go over some more information too, maybe hit up some ratios, supporting some of the evidence that I see in the markets. And again, if you need any help with anything, check out finding-value.com. Check out the website and use the word discount if you want to join our community. I do a lot of these kind of question and answer sessions that people talk to me directly if you need any help with anything. So let's dive in. I'll give you my financial opinions as we go through here. Andy, what became of platinum? Prices reversed despite a million-ounce deficit of platinum this year. Price spiked in 2008 to about 2,200 bucks. We're at 846 right now. 15 years later, 2.6 times less the top level. Hard to see huge downside as it hit the floor level before a surge back to plus 2008 levels. Well, right now, in the short term, it looks like we've got some good momentum to the downside that has to be reversed. And the ratios for platinum are screaming that it is cheap. So if I look at like a platinum to gold ratio, which I pulled up here, this is your double top. This was basically the end of the commodity bull market. This was the beginning of the commodity bull market was, I'd say somewhere in this range here, 98, 99. Huge surge higher. I did a double top and came all the way back down. And as of right now, we are at a very low ratio for platinum to gold. It's at 0.4. That is below where we were in 2020 outside of this spike lower. So maybe we're doing a double bottom here where we come up, come back and do a double bottom basically before heading higher. Just because you have a deficit in a market doesn't mean that the price has to go higher. What generally happens next is the commodity starts running a deficit. It eats through your inventory levels. The inventory levels get to a critical level, and then they start going higher. That's the general progress. So it is cheap. Platinum versus palladium. It bottomed in August or April of 2020. 0.3 is where it bottomed right here. We've been making huge progress there against palladium. We're up at 0.9. And it looks like a clear bottom that we're coming off of, for palladium at least. Historically, the ratio's up around 3. And we went all the way to a low level of 0.3. And if that were to reverse and go all the way up to elevated levels, and the elevated levels would be more like 4.5, that means you went from, we'll just say 0.45 to 4.5. That's a 10x in terms of the ratio appreciating against that metal. And if you're doing metal swaps, I swapped palladium down here for platinum. If that were to get back to that level, I made 10 times my metal. That is absolutely ridiculous in my opinion. And then platinum versus silver, it's still cheap, but we might be putting in a double bottom. Down, we could go all the way as low as 33-ish. So 1 ounce to 33 ounces. And then I think we'll head up. But there's your squeeze that we've got on the ratio, squeezing up. But we could still come all the way back down to 30. It's a possibility. So the one thing that you have to realize is that patience is required on a lot of investing. I mean, it's all patience. And you identify something that's cheap in the market, it doesn't mean it has to go higher in the short term. The cost curves for platinum are in the middle cost curves, like the middle to high cost producers are in the 800s, 900s. So we are below the cost curve for some of the producers that do the heavy lifting. So if you're in a deficit, it's a 1,000,000 ounce deficit in 2023 that was projected by the Platinum Council Group. If your price is below the higher cost producers, that just means that production could be cut back, or there's not going to be the willingness to expand production for platinum group metals. Palladium and rhodium are also very low. So now all platinum group metals are low. It's going to delay projects that are going to bring on platinum group metals. or nix them entirely in the short term. And that's just going to be a better case for the long term for the price to go up. So I view it as a very low risk entry point at 846. I would like to buy platinum too. It's coming on down. And you keep mentioning a slowdown, but government spending is nearly 40% of GDP, and that number is accelerating higher. How will this slowdown happen exactly? Well, they injected a lot of stimulus into the market, and this is excess liquidity. You can see it going up and down. It's not directly tied to inflation, but generally excess liquidity comes before inflation. And then you can see the slowdown in the excess liquidity. And this is what I was looking at, stating, maybe there could be a potential slowdown with all of the money that they're yanking out of the system in terms of excess liquidity. We also have the volume of home sales have definitely pulled back. And I know there's two things that are driving the credit into the system. It's fiscal spending and also credit creation from the loaning process, which is fractional reserve lending. So we're basically have those two as the drivers, and one of those drivers has definitely pulled back, which is home sales volumes. Sales volume is going to translate into loan creation. We know that loan creation has really pulled back. So there could be a possibility that credit gets destroyed through bankruptcies in, say, credit card delinquencies, loans that were put against cars or vehicles. As we know, there's some delinquencies over there. There could be some credit that's destroyed there. And then you've got the credit creation from the real estate market that's really pulled back. So there is a potential, and there's no stimulus going into the system anymore. So you're going from a highly stimulative state where they pump the system in 2020, and it takes some years for that money to work its way through, be seen in inflation, et cetera, et cetera. But all of the things that are driving that inflation are not driving it today. The only thing that's driving it is the fiscal part. And at the same time, they're doing QT, which is sucking money out of the system and out of certain financial assets. So we could see a slowdown. It is definitely possible um, that we get a stimulus. I call it the stimulus overhang, where stimulus kind of runs dry. We go to a interest rate that is too high to sustain credit creation from the real estate market. A lot of the money that gets created in the system is from credit creation. And if that slows way down, and at the same time we do get some bankruptcies, small businesses, some of these areas that are sensitive to the interest rate kind of fold, well, that's going to be credit destruction, not credit creation. So there is a possibility easily that we get a slowdown in the market from all that stuff. George Gammon is video after video of residential housing market crash imminent. Uh, well, my opinion is that the housing starts have definitely pulled back, but we still have very low inventories. And a lot of these guys get a lot of views based off of posting things that are very negative. So they're getting the feedback loop on YouTube to continue to post negative, 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 negative because they get a lot more views. And if you get a lot more views, you continue to post more negative things. And maybe he gets a lot of views posting negative things about residential housing market crash. Where it becomes difficult and where the data may not support what he is saying is we have incredibly low inventory. And that's like walking into a grocery store. You want to buy something and there's nothing on the shelf, and you're like, oh, and you turn around and make the conclusion, well, there's no shortage. It's in a bubble, and you're like, what are you talking about? There's nothing on the store shelf. It's all gone. So that I don't know how they can come to that conclusion. In history, when you look at all of the crashes of real estate, there isn't a single time in history where we had a huge housing market crash with absolutely no inventory. Now, he can think that the housing market's going to slow down and have a crash, but you would see it first in the housing inventory levels. So the inventory levels would go up first anyway. So if I would claim, no, we're not going to have a crash until inventory levels go up, why don't you just wait until inventory levels go up before making that claim? Another thing is, you can look at U.S. housing starts, and so here's U.S. housing starts, United States housing starts. Yes, it's pulled back, but it's still above average. Um, the way it looks is very similar to the 2000 pullback here, where you had basically like an ABC correction almost. And we'll see if we go on higher. In 2005 is when the housing starts basically peaked. It was 05, 06 of last market. And if we were to look at something like, I just used Leonard Corp, put them on a logarithmic chart. This is Leonard Corp going up. This is a bull market. This is the pullback. This is your consolidation, your 1, 2, 3 consolidation upwards. We've broken out of its resistance line here, did a retest, and we're starting to move higher in Leonard Corp and a lot of these other um, home builders. Why are the home builders breaking almost to new all-time highs? If we're in a housing market crash, why are home builders all moving up? I think he's wrong. That's my opinion. And I don't think, I mean, a lot of these people, they look at the data at the low level, but if you look at the markets that look forward and try to price looking forward into the future, then why are all the home builders looking pretty good? A lot of the home builders, the biggest home builders in the nation, they're probably going to say, well, they're buying down interest rates. It's part of the game. I mean, that's if they are going to buy down interest rates or do something with interest rates to get their homes sold, that's what they're going to do. They're going to continue to do that. What I'm going to say is if the interest rates go down, this is how you know if you're in a housing market crash, in my opinion. If the interest rates go down in a housing market bubble, house prices continue to go down. If you lower interest rates and house prices go back up because there's a huge demand for homes at lower interest rate levels, then the market hasn't gone through its cycle yet. We're at at least the articles that I read, we're at a 6.5 million home deficit for how many homes we need to build in relationship to household formation. And household formations are growing at a faster pace than what we are building today, which means the situation is getting worse, not better. And if you were to build the homes to satisfy all of that demand, you'd be at a rate in the housing starts at about 2.3, 2.5 million housing starts, million housing starts for years, which would be the largest housing market boom that we've ever seen in history. So I just I can't jump in that camp until I see the inventory levels go to a level that is high. There's no housing market crash until that occurs. Now, could there be softness in markets? Could there be a crash in a couple of cities? Definitely, there could be crashes in a couple of cities. I'm talking from a whole United States market perspective. Austin's definitely overbuilt, but there's other cities that have also maybe built too many homes, but there's a lot that haven't. I mean, a lot that haven't. But we'll see. I mean, we'll see it in the housing, we'll see it in the pricing. And if you look at Case-Shiller, the Case-Shiller index, is this is the weirdest housing market crash that I've ever seen, but we're basically crashing upwards at this current time, and it hasn't pulled back yet, and it could. I mean, I'm not saying it can't pull back. I'm not saying we can't go into some channel that consolidates or whatever, but huge market crash, I just don't see it with where the inventory levels are at. It says, even though we've been having a pullback, seems like forever now, I'm more excited about pullback than gains. The gains will come with time, but the pullbacks is where we'll make the biggest gains from. We are the same age, but I didn't start investing in early 2020 with physical silver. Spent most of my time and money before that investing into my business, which has allowed me to now invest a pretty decent amount of money into this bull market. Found my channel 2020, wholeheartedly believe in the thesis, but I just want to accumulate as many assets as I can before the rest of the world figures out what you and a handful of others have figured out. Since finding your channel, I'm slightly down in some sectors like dry bulk, while even in some sectors like mining and metals, and up pretty large in other sectors like energy. Really appreciate you taking the time and effort to teach us the markets. I'm never going to be one of those guys who's able to do this type of investing on my own. What I'm able to do is see through logic, the truth through the logic. And with your help, I've been able to turn the decent amount of money into a retirement fund most people would be happy to own. I love the YouTube channel. I love the website. I love how you present this information to help everyone with their financial future. Well, thanks for that. Awesome comments. Yeah, there's a lot of people who always ask questions, and I try to answer as truthfully as I can. And I don't know everything, guys. I try my best to share what I found, and that's all I can say. Um, all I know is I got gold at 1250 and silver at 14. I haven't sold and expect it to go a lot higher. It's my retirement savings. So here's another thing. We can touch on a couple of Twitter comments with gold that I did share. So we can go here, and it's Gary that I want to talk about. He says, it's been my opinion for years now that the banking cartel and the government manipulates the price of gold to control inflation. Gold over 2000 is a clear siren that the Fed is failing at controlling inflation. If you want to bring inflation down, you simply can't have $2,000 plus gold. This is why there is always an immediate attack every time gold pokes above 2000. Some folks want to believe this is natural price behavior, or that the government would never try to suppress the gold price. To that, I would respond, the Biden administration virtually drained the SPR to suppress energy prices and tamp down inflation, putting the U.S. at extreme risk if there's any kind of disruption in supply. If Biden is willing to put the U.S. in that kind of danger, do you really think a little suppression of gold price is out of the question? That's Gary Savage, and I would tend to agree, as the three metals, uh, gold, silver, and platinum, are the three most uh, heavily shorted metals out of any other commodity in the market. Those are the three heavily most shorted markets. All of the ratios that I looked at in history were always comparing a commodity to the price of gold. Gold is your measuring stick. If they were to do something, I would think it would be towards gold if they're going to do it. That would be my take. Going down here, it says if that was true, wouldn't there be shortages of the physical available to retail? Wouldn't constant availability of gold at online retailers invalidate this theory? He says gold is a strange commodity. Higher price increase demand and lower price decreases demand, unlike every other commodity on planet. And people chase price, and it's true. So again, he says gold is a canary in the coal mine. If gold is kept in check, the rest of the commodity markets also tend to stay relatively calm. This strategy worked very well since 2008, but has stopped being as effective lately, especially when it comes to oil. Yeah, they're losing their grips on the financial futures market, is what basically he's saying. So, yeah, I think it's just a matter of time, and we just got to be patient for this stuff to turn around. This is how I see it. This has been a plan since 1913. All the national parks have been reserved for the creditors of the U.S. If the U.S. can't cover the debt, the creditors get the land. That is what central banks do in every country. That's when we That's when they meek unsheath our sabers. If guns are outlawed, new contracts will be made at the end of the sword. Um, Coming on down, gold, higher highs above the 200-day EMA. Look through all the bullish lens. Broke above the pennant 18 October, which is typically retested. Scenario 1, gold tests its 200-day EMA and rallies to new highs. Scenario 2, 1933 holds and gold rallies to new highs. Gold is suggesting to me that silver is running a bull trap. Um, I think you mean a bear trap. I would be 99% positive if that is silver was also above its 200-day EMA. So it's probably a bear trap, is what you're saying. Bull traps is when you trap bulls and it goes down. Bear traps is where they trap all the bears and it goes up and it squeezes them. But yeah, gold's on top of everything. Agreed. It will tank below 72. China posted low demand. Monday inventory will slip. Yeah, this is everybody trying to trade the short term. I don't really try to trade the short term at all. I try to time my buys as best as possible. But demand, if you look at global demand, it's going up for oil. And I'm surprised that oil's where it's at. But maybe the futures markets are pricing something in the future, like a slowdown in that demand. We just haven't realized that slowdown in demand. I don't know if China itself posted low demand. I didn't see that. But looking at global inventory levels and global demand, it's all pointing higher, higher demand and lower inventory levels. Um, Thumb up, just own money though, holding physical and mining. What a horrible sector. Hated left for dead. Yeah, agreed there. Uranium spot going to hit at least $80 by year end. There are utilities out there that need to buy in a very tight market. Yeah, I don't try to focus on predicting where the price will necessarily go. I just go where the value's at. And here's another thing. Going back to Twitter here, and since you were bringing up uranium, if we look at, oh, that's not what I want. Go to my profile. There we go. We go here. Patrick says uranium is probably an optimism part of the cycle, which optimism's up here. I don't think there's any way we're in optimism um, for uranium. Because, I mean, if you do URA divided by UX1, we are at basically lows. There's no way we're in optimism. In my opinion, optimism won't occur until we get like up here. And then, I mean, then you go to euphoria is up here. So I mean, this is like disbelief. Like people are not in the equities. They don't even think this thing's going. I mean, the equities haven't really moved much, at least compared to last bull market. Now, CCJ has moved. Camco's definitely moved higher, and this is Camco versus uranium, and that is definitely at a higher level. But the overall index, it's still really low. So, you know, looking at uranium, even though the uranium spot price could be at 80, the companies itself have not moved. So I think that maybe we're in the disbelief phase. People aren't, you know, this rally will fail like others, and I don't think people realize how strong the actual physical pricing is. Here's the physical price, and you can see this is a really nice looking chart, very strong on the right hand side, moving up, very bullish. And look at that. I mean, we just continue to keep working our way higher. Hardly any pullbacks. So again, we'll see where it goes. What I'll say. Thank you for walking through framework of commuting for job. I live an hour away from major city, and if thought through this scenario, I left my remote job and wanted a job in the city. I don't know. I don't like traveling. I think it's a waste of time. So, what is your inflation rate in the U.S.? $3,500 is what I would earn the whole year. I have a full-time job. Oh, inflation rate. Inflation's up. I don't know. Probably the real inflation rate's probably over 10. If you guys look at the shadowstats.com, the inflation rate is pretty dang high. That's the old way that we calculate inflation. So this is the 1980s based inflation rate is over 10%, probably 12.5% is what I'm seeing here. The 1990 base, because they continue to change the way they calculate it, is now at like 8%. And then they probably calculate it differently even today, and it's probably more like 4% or something. So that's the inflation rate that I would go off of. I think platinum has no future. That's okay. And that's no big deal. Um, it made no sense to work during COVID when I could get 5K extra from my income and save it on gas, car, avoid giving out a free loan. All these factors result in saving on interest as well. Why did they worry about a few hundred earned if they can print 7K extra alone? Yeah. Hi, Andy. We also had premature twins, 32 weeks. Son had asthma, sick most of the winter, constantly on puffers. Between 6 and 8, this got much better. Last time he used a puffer, he was 10, 23 now. No idea how common this is, but hope your luck is. Yeah, yep, they're 5, turning 6. And they use those puffers. They do. You are correct. Um, SMRs and microreactors will power AI. Well, that's the hope. That will reduce carbon emissions, nuclear from small microreactors and small modular reactors. That's what I think the future will be. And if that's what I think, then I take an investment strategy around that. Part of it, not all of it, but I also think that there's going to be tightness in the oil markets. And with everybody switching over to electricity and AI, I think those are all valid remarks. I think that's what the future will be. They'll just stack SMRs together to create the power. In inflation recession charts is indicating beginning of the recession. The actual starting point or the date is acknowledged. Well, they acknowledge recessions after the fact for the most part. It takes a couple of quarters, maybe even like a year for them to actually look backwards and calculate it. So you can go through a recession and then it gets tagged a recession after the fact. You just don't know you're in it. That's the hard part with a lot of this is a lot of people think um, that we can see it before it actually occurs or we can see it real time right when it's occurring. I don't think that's the case. I think it's they label it after the fact that's behind us and you're like, oh, we're already through it for the most part. Um, and that's the hard part of these guys trying to call recessions is, they can say we're gonna have a slowdown, but you don't know until after the fact. I'm a member of FE, wrote on Discord several days about the Melody Wright mortgage analyst. Yep, long-term views. There's potential storm brewing that could impact your real estate conclusions in the short term. Yes, there's a problem in the market. Hope you look into it. Yeah, I'm not denying that interest rates are not slowing down the market, but the inventory levels haven't built rapidly like we've seen in other market crashes. So I don't think a crash um, is necessarily going to occur. But another thing that doesn't match the data is the home builders are all going up, which means are we going to see an increase in housing starts? And has the slowdown, have we already gone through it? And that's what's tough to gauge real time. Andy, how about getting some furniture or art in the computer room? Yeah, he is too bullish to have furniture. Actually, I do. I spend a lot of money, or I put all my money in investments. I don't. I have small kids that ruin furniture. Uh, Daniel DeMartini Booth doesn't necessarily know anything more or anything less about the housing market than what I would research. I know there's a lot of negative people out there on the housing market. There's a lot. George Gammon, I guess Daniel DeMartini Booth, also venture capitalism. He's been negative since 2020. So all these people have been wrong. So I don't know. I have a different viewpoint. It's just really focuses on the deficits in the market and uh, the inventory levels. That's it. It's that simple. So you can't claim to be in a housing market bubble when you don't have any inventory. It doesn't make any sense. They can speculate all they want on potential housing houses coming out of the market, but they're not there, and you can see it before it in the inventory levels. So I just no point in saying that we're in a bubble yet. You could say that you're slowing down, but my opinion is that the computers believe Powell job owning is only tool, and it worked today. We all know Powell can't crash the banks for much longer. Computers will be reprogrammed to hammer, slam stocks. New scale project was canceled, may affect uranium short term. Not uranium. It's going to affect new scale. Uranium's short no matter what. They're not the ones providing all the demand. Yields are collapsing as is oil. Yeah, but we don't know if that's necessarily going to hold out. Yields pulled back, but we don't know how sustaining that pullback is. We still have an inverted yield curve that the curve is inverting further. So I wonder if conspiracy or if there are forces at work, forces like Arthur. Um, Premium nickel resources seem to be averaging the nickel price. I think JPM's got their hands on nickel. They came out when that huge squeeze occurred and they said that they were going to control it. It was really weird. And now the price has been absolutely weird in the way it trades. Andy, there was a 30-year bond auction today. It didn't go very well. Yeah, agreed. There was, and it looked absolutely horrible. War in the Middle East, no Russian. Oil rig counts down. Demand steady up, and Saudi keeps cuts. Oil below 80. Something is wrong here. Agreed. I don't know if it's an SPR release, but something is weird. And I'm just going to ride through it. No point in getting worried and panicking. It's a domino effect related to general market sentiment. Who sells first makes more money, and also playing the downtrend in and out. The buy and hold is a little guy collecting a small div. All is game. Nothing can escape the sell-off. I don't know, guys. I'm not that bearish, but I mean, could the price go down to $60 or $50? It's possible, but I'm not as bearish as some people. Demand's still holding up. Inventories are still low, and we'll see what happens. It says if there's a recession, we're already in a recession. Just because you change the technical definition doesn't mean it doesn't exist. Eventually, this chicken will come to roost. Yeah, we'll see. I'm gonna end it there, guys. Oh, with all due respect, Andy's seriously wrong about the real estate and recession. Doesn't mean some commodities won't boom. I believe they will. Not all of them, though. Gold, silver, and uranium. Yeah, we'll see. Uh, I take a position. I think that the housing market isn't as bad. I use data. The data is uh, these larger companies that are home builders. They're still up. They're going up. The regional banks is putting in a Livermore accumulation cylinder (KRE), and it looks good. And everyone can say with narrative, "Oh, we're going to have this big crash," but there's no inventory. There's a big deficit in the market, and are interest rates too high? And could it slow down in the short term? Definitely. But what happens? What's plan two of Powell's move here? So let's say he gets a slowdown. What's he going to do? Probably lower interest rates. And what are lower interest rates going to do? Probably increase demand for homes, and there's the home sales are going to go up. So the question is, in a hyper supply phase, interest rates go down and home prices go down at the same time. That's a hyper supply phase. There's too much supply. Are we in that condition? I don't think so. Why? Because there's no inventory. It's that simple. Can prices go down for, go sideways or go slightly lower? Yeah. I don't think there's going to be a crash, though. I don't think there's going to be a 30% pullback. Maybe in a few cities, but not across the nation like 2008. I don't know. That's my take there, guys. If you guys like the content, give me a thumb up. Subscribe to the channel. Subscribe to the website. And that's all I got, guys. We'll catch you next time. This is Finding Value.